Welcome, Retail Fam, MW World Killer, Game Trading Crypto Trading Course 1.0. I decided to do a new streak of leverage trading, markets, crypto, everything related, everything you need to know uh, to defend yourself against losses, liquidations, and how to make the gains, gain trading, and the best profits. So I think this will be a streak. Well, it's gonna be a huge treat. So I'm gonna do the basic today. So I'm gonna start with basic, not going into a lot of details. The tools to use. So I'm not gonna talk about those ones. Those will be. I'll talk about those ones in the next trading course vids. But I'm going into the basics. And what does this basic vid gonna show you? First of all, it's gonna show you when I post something, so you guys will understand what it means and how to trade it. So a lot of people, they get into the free private, but when I post something, they just don't understand what I mean by it. So that's the most important part. So that's why this will be also the most important trading course vid for you guys. By the way, I agreed with the team. This vid will also be provided in their group. So because they trade on my style, they trade a little bit more riskier than me, but they do the leverage trading, the shorting, etc. So that's really their thing, and but they have a more risk style. So that's why I agreed that they can use they can share this vid also in their group, because it's very important that the people that are trading in their group, that they also understand what they mean. Although they give a lot of, it's not like when I share a chart, they give really the entry zones, they give the stop losses zones, they give, so they really go and give more details in the trades they take. So that's not what I'm going to talk about, but it's very important that anyone needs to learn these basics, because it all starts here. It all starts here. So it starts with the basics. If you don't have the basics, you cannot grow. And even if you're going to grow, you're going to get wrecked in the process. So you really need the basics first. So the base. And in the next vids, I will also do a tutorial on, I don't know, Bitfinex or Blowfin or Weeks. Maybe I'll do them all. Then we'll go just gonna make some vids when you see things in action, and I will show you guys also a lot of tricks on those exchanges, how to do it. First of all, what I also want to say is, you really, if you trade on high volume, so especially for the high volume trades, it's very important that you take at least two. So Blowfin and Bitfinex, or Blowfin and Weeks. Weeks, their updated app is really great, guys. So they really improved their trading app. So if you didn't try it out yet, go try it out. So now we really have three great, strong partners with very good trading apps. But especially if you trade on high volume, for example, if you want to trade PopCat on very high volume, don't go do it on one exchange, do it on two exchanges. Just suppose that you, let's just say you want to short PopCat, you want to short it with, let's say 500k. Do 250 on Blowfin, do 250 on Weeks, or 250 on Bitfinex, or divide, or take them, all three of them. Don't do it on one exchange, and there is a reason why I'm saying this. So this is really for traders that trade with 100k plus USDT on their accounts. So this is only for them. If you trade just with a 10k, 20k, 15k, 30k, whatever, you can do it on one exchange. You don't need to do this on more exchanges than that. So that's about that. So well, let's dive in. Let's start. First of all, guys, lesson number one. That is very important. So I'm gonna write it down, guys, because you guys need to read this. Lesson number one is you need to be controlling. You need to control your greed and emotions. this is something very important, guys. You need to control your greed and emotions. What does that mean? It means that when you want to go, for example, short Bobcat, you need to control your greed and emotion. What does it mean? It means that you need to not overposition yourself, because as confident as you are that the price might dump down, if the market makers decide to ramp it up, you will get wrecked. What does that mean? That means that you're going to lose your money and you're probably going to get liquidated. And when you get liquidated, you cannot fight back because you're out of the game. So lesson number one is you need to be always in the game. I know that for the people that have been following whatever trading courses out there, whatever paid signal groups, whatever crypto schools, uh, you know, uh, you know, for me, from my view as a professional trader, this is really all just Mickey Mouse charting, Mickey Mouse trading. These guys have no clue what they're doing, and maybe they know what they're doing, but their purposes is that you'll get liquidated. And why do they want you to get liquidated? Because that's how they make money. These guys have agreements with these exchanges. They've got agreements with market makers. I cannot prove it, so I don't know it for 1,000 or 100% sure. But let's just say I'm. I've been too long in this business to know what's going on. So this is just my opinion. So when you get liquidated, that's when they make money. That's just how this dirty business works. So control your greed and emotion. What does that mean? Because we're gonna take it step by step. So I'm gonna give you guys an example. Suppose let me just say, suppose you wanted to get into a short over here. Why? Because you've got that sick freak of MW. He made you guys a chart, and this was the entry zone. So this was the resistance level. So you wanted to enter over here. So now comes number two. You need to have enough funds on your account. This is number two. You need to have enough funds on your account. If you don't own enough funds on your account, you cannot defend yourself from getting liquidated. It's possible that you do it on low amounts. So suppose, it's very funny when I see a lot of people that tell me, well, MW, we joined in and we want to join the free private and we deposited the $500 that is required. This $500 is just a number that we put on there so we know that we're dealing with normal, real, active retailers and not some scammers or someone that tries to do something. That's the reason. But because we are requiring $500, it doesn't mean that you have to deposit $500. This $500, you're not paying it to us. It's not mine. It's your money. We're just giving you that number so we can keep out those scammers. And if you want to leverage trade, don't do it with $500. $500 will do nothing. You can build a portfolio there, but it will take you a long time. If that's your goal, just do it. But don't, if you want to really, really leverage trade and make money, you have to fund your account. You have to fund it to protect yourself. And why is this so important? Because I'm going to show you guys. For example, this Bobcat. We can all agree that this is just one big Ponzi scheme. We also know that Bobcat, nobody on CT has destroyed this Bobcat 1, 2, 3, 4 times. I'm the only one. And there are like 4 retailers that made their first million trading on Bobcat. On Bobcat, you hear me good, on Bobcat. On these dumps. 1, 2, 3. And the last one was over here, by the way. So three did it over here and 1 did it over. But just, guys, not selling you dreams. These retailers that made their first million trading, these guys are very high volume traders. So they risked also a lot of money. But you know, they risked it and they made it. So congrats to them. But first of all, suppose that this was your entry. So you wanted to go in over here. Okay, fine. Your liquidation level, and I'm going to be very conservative over here. Very conservative over here. Your liquidation level, so suppose that you went in on this line over here, 130. Let's just say 130. Your liquidation level needs to be at least at a double. So 130 means 260. This is at least. This is like 50% risk. 50% risk. This is 50-50. If you want to do it the right way, if you really want to do it the MW style, you need to do it at least 1.5 to 2x. That means that your liquidation level at 1.5 is 260. It's around 320. Let's just say 320 over here. This is 75%. If you want really safe, you have to do it on a 3x. So it means around this 370. So what is this telling us? What this is telling us is this. Is there a chance that Bobcat will ramp up to 3.7? Yes, there is a chance. But the chance is very low. So it's probably maybe a 1%. I'm not talking on the long term. I'm talking on the short term, on the midterm. So maybe in a week, 2 weeks, Bobcat will fly into this liquidation level. The chances are so low. It happens maybe 0.5% of the times. Some coin gets foamed up and a lot of leverage. Boom, liquidated. And now comes the most important part is when you trade and you enter over here and you've got your liquidation level over here or your liquidation over here, it means that your position has to be low, especially if you're trading with 500 bucks. But the more money you have on your account, so suppose you've got like 10k, 20k, 50k, whatever, then it's doable. It's no problem. You can make a nice position over here with your liquidation level over here. And why is it so important that your liquidation level is always high? Why is this so important? Because the moment that your liquidation level is very high, these two, so it's all connected. At MW, everything is connected. These two, greed and emotion, those will decrease dramatically. So when someone, that's what I tweeted yesterday about also, when someone feels fear, he's overpositioned. It means that he went into heavy. So if he went in over here with a big position and his liquidation level is at 140, 150, I understand that he gets scared and he sees the price going up. Oh my God, the price is going up. Oh my God, I'm gonna get liquidated. I'm gonna lose all my money. That's not trading, guys. If that's what you're doing, that's not trading. I know that all those trading course schools and whatever, etc., they want you to believe that that's trading. That's not trading. That has got nothing to do with trading. What you're doing there is you're gambling. You're just gambling with your money. It could play out if you open up a very big position based on the funds you have on your account, and maybe it gets rejected and boom down, and you doubled your portfolio, tripled your portfolio in a day. But that's gambling, guys. That's not trading. That's not trading. And yes, I've created a style for those guys also that like to trade that way, but we're going to talk about that one in the next trading course vid. But now what most important is just the normal. So why is this so important? Guys, the moment your liquidation level is very far away, you'll see because the moment that emotions and fear gets into your head, you don't know what you're doing. You will make mistakes, you'll sell, you'll decrease your position, you close your position, then you open it again, and then you get emotional, and then when it goes up, you go, yeah, oh, I got it in now, and then you are lost. You're lost, and you're on tilt, like we say in Dutch. I don't know, is it also in English? I would have no clue. But you're on tilt. So whatever it is you do, this is very important, because if you want to educate, because you can follow me, you can teach yourself the MW style, you can teach yourself the TA, you can teach yourself everything. But if your liquidation level, if this basic is over here, it doesn't matter what I say, and it doesn't matter what whoever says, and it doesn't matter what you have learned in all those months or weeks. Your emotions and fear and greed will take over in your mind, and you will make mistakes, and you'll end up losing a lot of money, because this game is made for this. So guys, again, I cannot repeat myself enough about this. You need to control your greed and emotions. So when you take any trade, make sure that at least your liquidation level is at a double. So what does the double mean? The double means if you enter at 130, at least 260. And if you want to risk it, 75%. But this is it. And why am I saying this? Why am I saying this? Because guys, this leverage trading basics, there's so much that I can teach you guys, so much, but I cannot do it all in one vid. So I wanted to teach you guys something else now, but no. I have to do it in the whole trading course vid. So let me just take it step by step, so you guys will not get. So you need to have enough funds in your liquidation. I hope this is clear. This is just clear, and I explained you guys into details why that is, why it is that you need to have enough funds on your account, because it's the only way how to defend yourself from getting liquidated. And if you're because someone, let me just show you over here, someone that entered over here, let me put on a 50 minute, you entered over here, for example, and the trade goes against you because you chose to chase the trade just like the team does. It's no problem. But your liquidation level is very far away. So what happens is, even if when you go chase trade, the price goes against you, you add to your position over here. This will decrease your liquidation level, by the way, so you have to do it slowly. You have to do it slowly. So over here, you add to your position. If this thing decides to do something like this, you add to your position. This way, your entry that was over here will be somewhere over here. And if it goes up again over here, your liquidation level is still far away. You add to your position. Your average entry will be over here. And when it does like this, because that's going to happen, I hope that you guys agree on that one. Nothing goes up forever. It will come down at some point. It maybe 1% will not come down and goes FOMO up, but for most of the time it comes down, like 90% of the time. When it comes down and you get to break even, you can decide to just exit, or you can decrease it with 50, 75%. This way, this trade that went against you over here, you saved yourself from it and you took your money back. And at least if it goes even lower, you're gonna take profits over here. So, I don't want to go to dive too deep in this one. I don't want to go to dive too deep in this. I'm gonna save that for another, but it's just for you guys to, you need to understand how important it is that your liquidation level is at least far away, because when it's far away, let me tell you this. Yesterday I tweeted, real traders, professional traders, they hope that Bobcat will go even higher. And why is that so? Because these guys, what they do is this. Let me show you exactly what they do. The team also does this, and they share it in their group. They do it with a check mark. And that check mark for the ones from the page from the game trading crypt, what they show you is they show you the check mark, because what they do is they take profits. They decrease their position. That's what they do when they show you guys that. They explain it also, but that's what they do. So suppose that this was the entry or whatever, and then it came down over here. What they do is they see that there is, for example, let me put on the indicator, because now the indicator comes in play. Suppose that this happens. This is on the 50 minutes. Let me put it on the 1 hour over here. This was the resistance line that I pointed out in the group. Suppose that you went in over here. And I've seen a lot of P&Ls that went in over here, by the way. Congrats to you guys, by the way, for making this money. Look at this. What do you do over here? You guys have this machine of this indicator. What do you do over here? What you do over here is you decrease your position. Or if you're satisfied with the gains, just close the damn position. Market close. You made your money. And if you still think, wait a minute, no, this Bobcat, I want to make a lot of money on this one. What you do is you at least decrease like 50% of your position over here. Close it, because it comes down to the indicator, so you know that there is, it doesn't have to be, it could have dumped directly down, but there is like, I think with this indicator, it's like 60-70%, it will probably bounce up. So if you have this tool, you have this indicator, this is how you use it. So when this thing comes down, you take 50% profits, you take it out. If it goes up, just like now, we closed above it, so it probably wants to ramp up again. Okay, no problem. When it reaches over here, you can start adding again. So over here you took your profits, and over here you start adding to your position again. Even if it would break out, you can start adding again. Because why? Because if your entry is over here, you can start adding over here, because it's just profits. It will probably take your average entry down. It doesn't matter, because you've got enough money, because you took 50% out. And if it breaks up, you gotta add again. If it goes up, you're gonna add again. And then the same amount that you went in over here will be in over here, the same amount. But your average will be now over here. So when this thing comes down, like this comes down, your gains will be bigger. You'll have bigger gains over here than it was over here. I hope that you guys can follow me when I'm explaining here. This is trading, guys. This is really, if you want to go in, if you want to go deep, really deep into the hole, this is trading. This is how you trade. And there is a lot more to explain, because you can calculate if it's going up or it's coming down. You can calculate this. You can calculate also if this thing is going below the Indy, etc. But that's for another trading course with. You can how to calculate these moves and when, because if I would trade, I know if I'm gonna decrease over here 50 or 75% of my position. I know it. I know if it's gonna hold or not, because it depends on a lot of other things. And if I see something bearish, I take like 20% out instead of 50, because I see that other narratives this thing will probably break down. So I take only like 20% out instead of 50 or 75, or maybe I'm seeing some bullish signs. I take out 80% over here, because I know that it's probably going to ramp up. So this is very, very, very important. Guys, I'm not talking about Bobcat now, because Bobcat might make a lower high and then from here on go down. So I'm not talking about this. It's not about Bobcat. Bobcat, I'm just using this thing as an example. So this is how you trade it. This is how this is for the bearish. So if you're gonna short it, we can also talk about the longs, because you have to understand that what I do is I show you guys the moves that I'm seeing on the way down, but the way up it's the same. And for Popcat, let's all respect the fact that Popcat is doing great, although a lot of retailers made the first million trading shorting it, but Popcat made a new all-time high. So Popcat is one of the strongest, most bullish coins out there. You know, so look at this on the weekly. Look, let me show you. Let me show you. You know, that I'm bearish on Popcat has got to do with the fact that this is a Ponzi scheme. But it doesn't mean that you cannot make money on it, because listen guys, this was all-time high over here. We broke above it over here. Monday we broke above. So, and you know, for the ones, if you watch my previous videos, live streams, or trading course vids, when you go into price discovery, that's super bullish. That's super bullish. When a coin goes into price discovery, so making a new all-time high, it's super bullish. So you could also think, okay, well, wait a minute, MW. I know. You are very bearish on Popcat, and you're just waiting to give the call for these dumps, these ones, just like you did past months. Because I nailed all those, by the way, guys, for the ones that don't know this, I nailed all these dumps. But MW, wait a minute. You teach us how to make money. You teach us how to leverage trade. So this thing is in price discovery. Why not just long the crap out of it? Because the bulls are marching over here. Yes, I agree. And how do you do that? How do you do that? I'm going to show you. I'm going to show you very easy. First of all, we broke above the indicator over here. This was at 10th of September. Came down, closed above it. This is super bullish. This could be an entry on the daily. Boom, 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 boom. Well, but this is not trading. This is investing wise. So if investing wise, spot, buy in over here and stop loss below it and let it run. But let's now go trading wise. Trading wise, I'm going to show you trading wise. Put it under 1 hour. Put it under 1 hour. So suppose, where was that? Wait a minute. What was the level of the new all-time high? Let me see. Come here. It's this one. $1. Okay, $1. So over here was $1. This is $1. So over here we broke all-time high. And what you saw is this scammy up and down. But when you see that we made a new high, look over here. This could be an entry. You see how it's holding the 200 EMA? Over here you'll get out. Over here again, you'll get out. Over here, this is about the most beautiful one. Goes up, come down, and what I always tell you guys, when the 200 EMA comes together with the indicator, it's one of the most powerful moments for a price, up or down. In this case, up. So they came together over here, and this was your entry, and you're just riding it up. This is just on the 1 hour. Because if you would jump in over here, you would still be in the trade. Technically, you're still in the trade. But I put it on the 15 minutes. On the 15 minutes. Over here. It went up, down, 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 wait, up, over here, out. Because you need to get out. Just get out, because you don't know. This is the style. Don't be greedy. Out. Over here, I'm back in. Boom, 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 boom. Over here, you're out again. You wait. And over here, I wouldn't trade this because on the macro, I've showed you guys that this is the resistance. So you just need to be out over here. Don't go waste a lot of time in trying to long this. But it works the two ways. But as you guys can see, the Bobcat is very volatile. So you'll see a lot of invalidation. Over here it's validated and invalidated and validated, invalidated. Because why? Because you have to put on the 1 hour time frame. The 1 hour time frame is the one that is solid. Over here, this is the one that is making money. So this is the style, guys. This is the style. And when the most important part today is the liquidation level, because when the liquidation level is very far away, you will not be emotional. And let me just say something else. We have been holding the indicator now since, what was this? Since Friday, we're holding it. If we're gonna lose it, if we're gonna get a candle like this one, like below it, rejected, boom, down. So if this thing is going to lose the indicator, this is also a short opportunity. This is also a confirmation, a closed candle. So it has to be closed, not a spike. Let me show you guys where we see one of those. Let me see, where is one of those? One of those. Where are you? Are you? Are you? Are you? Well, I'm not seeing anyone. I cannot find. Over here, for example, this one. This one. We spiked below it, but we closed above the indie, in the indie. I got another one, a better example. Over here, for example, this one. We went below it, but we closed above it. Boom, boom, boom. You see? We went below it, but we closed. So this candle was the confirmation for this upside. So keep this in mind, guys. So you have to trade it that way. So if by any means, if this one will close a candle below it, that's your short entry. But keep in mind that most of the times they like to retest. So what happens is it closes below it and then it goes up a bit and then get rejected and then come down. But you have to be, if you want to get in directly just get in. But you have to know that it might go up. So do a DCA. So if it goes up to this line, you add to your position. If it closes above it, get out. Just get out. Market, sell out. Because it will try to wreck you. But by the way, guys, I'm showing you now the safe trading. If you're just like the team, they don't care. They don't care. They just shorting Bobcat. They just don't care. And they hope that it goes up more because they will add a lot more to their short position. They just don't care. They're chasing this coin down. That's what it means when I say they're chasing it down. We reach the level, they don't trade it on a 50 minutes, not on a 5 minute, not on a 10 minute. They don't give a crap. They're just chasing it down. The only thing that they do is, if price comes down to the indicator, for example, let me tell you the 4 hour. Let me show you the 4 hours. Suppose that we will get a dump on Bobcat to this level over here. They will probably get like 50 to 75% of their position out. They will take huge profits over here. So that's what they do. Because they have been chase trading this trade. They don't care. So, okay, you got this FOMO going on, no problem. We start shorting over here. We just don't care. We're going to start shorting. If you want to make that next move up, we will add to our position. If you want to make this move up, we don't care. We will add over here. Because you have to understand that their liquidation level is probably around 10 bucks or 12 bucks. They they've got a lot of money on that exchange. They don't care. They just don't care. Goes up, they will cheer it. You want to go up? Fine. We're gonna short more. And at some point, this thing, every chart, doesn't matter what chart, at some point it will do like this. And what they want to increase their position and higher up their average. And when this happens, it's kaboom, ching ching. They're gonna cash in again and again and again and again and again and again. That's like they keep doing it. They're doing this for years, guys, but you need funds for this. If you don't own the funds, then this will probably not work out for you. Well, it can work out for you, but you need to go in on very, very slow amounts. a very low amounts, not slow amounts, low amounts. Okay, I'm starting to get a little bit dizzy now. So guys, this is Trading Course 1.0. This is the most important part. You cannot imagine. So where is that text that I made? Where is it? Where are you? Where's that text I made? Oh my God, where is it? Oh, here it is. Listen guys, this, first of all, if you want to leverage trade, if you want to do leverage trading the right way, you have to control your greed and emotion. It's number one. It's just number one. That's number one. Together with it is you need to have enough funds on your account. And not need to have enough funds on your account because, I don't know, you want to, it's to protect yourself against getting liquidated, because the whole game is built on not getting liquidated. If you cannot get liquidated, market makers will hate you, because if they cannot liquidate you, then they can also not manipulate the price. You see all those, when you see those prices do like this, up and then down, then up, down, that's just they're liquidating retailers that don't do as I teach. What they do is they go into, what they do is they go in here, they go in here on a short, and their liquidation level is over here. And then what they do, those market makers, they just do one spike up and then down. So you're liquefied, you're gone, and over here you could have made a lot of money, but you didn't because you got liquidated. So guys, this is, especially if you want to follow the gain trading system, this is the most important part. It all starts over here. I cannot teach you something if you're a liquidation. I can, even if you would ask me a question, listen, MW, what do I need to do? The moment I see something, someone writing this or sending me a message, oh my God, what do you do? I know he's overpositioned and his liquidation level is very close. Because if his liquidation level is over here, then I'll get a message like, hey, MW, well, that trade is going a bit against me, and what should I do? And he's relaxed, and he's thinking, and his mind is clear. Maybe if it makes a ramp up, add to your position very slowly. If it ramps up, higher up your average. Boom. And when you see like this, then you have your money back, and then you can decide for yourself what to do. What I would do is, if a trade goes against me, no greed. If it would come back to money back, I will at least decrease 50% out. 50% out, at least. And if it wants to dump more, well, so be it. I'm making a lot of money. Don't be greedy. Don't be greedy, because if it does like this, you came back to your money and you did not decrease your amount, and it does like this, then you'll get emotional again. Oh my God, why didn't I take my money back? Oh my God, why didn't I decrease my amount? But if you would just take 50% out, if it does like this, you're going to add another one. And then your average will be over here. And if this thing goes down and you would exit your whole position and it dumps further, you'll get emotion. You got emotional, the same. Oh crap, I should have stayed in. And all these guys always do, or they always do, when I go in, they go up. When I go short, that goes up. When I go long, it comes down. This is just your mind. This is the emotion and greedy your mind that's talking to you. You have to protect yourself from this. Because I cannot teach you how to not be emotional and greedy. I cannot teach you that. I can give you the pills. So you're going to take a pill that will kill it. This is the pill. This is how you do that. So this is Trading Course 1.0. So in 2.0, we're going into a lot more details in when and how much we should take profits or decrease our amounts or not. We're going to do that in Trading Course 2.0. So I'm going to make a new streak. And by the way, guys, just to be clear, the indicator on coins like Bobcat, like You have to be very careful, and you have to, when you trade on the 50 minutes or 5 minutes, you have to take the green when you see it. Because why? These coins are very volatile. You can see it also over here. These shit coins are all volatile. So they respect it like we're seeing over here. Respect, respect, respect the 200 EMA, then down, 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 then up, 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 and then down again. So what that means is that you need, when you're trading the lower time frames, you need to take the green. Just take it. When you see, let's just say you went in, confirmation, okay, I made 500 bucks. Just take it. Just take it. Because you have to eye the bigger plan. The bigger move is when I share a post. When I share a post, that's the big move. You know that there is a big move coming out over there. And for example, just like the one that I shared, I don't know where the chart is. If we will break up above that 130, it means that there is a breakout. So when there is a breakout, it means get out of the trade. And if you want to chase trade it, that's another story. But if you want to chase trade, you need to also understand how to do that. So there will be also a video about chase trading. There will also be a video, but the most for the basic, this is just basic for now. When you entered over here, you should have taken some profits over here. And over here, suppose that we break out over here, just get out. Just get out, because you'll probably see a next move up. Keep that in mind. You're probably going to see a next move up. And how can you eye that? You can eye that on the indicator. And if you, well, it went up. You know what? I'm not going to long this. I'm not going to short this. What I'm going to do is I'm going to wait and strike. And what you do then is just put it on the 5 or 15 minutes. And when you see an invalidation, you jump into the short. This is what I tell you, only traded on a validation. So it means just like, let me give you guys an example. Over here, let me give you guys an example. Let me remove this all. When I say invalidation, this is invalidation. Invalidation is invalidation. Let me put it on a 15-minute. This is invalidation. So suppose that over here we close below it. Boom, retest. This is your entry of your short. Boom, 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 boom. You made money. You made money. I don't know, based on your how big your position is, you made 200, 500,000 bucks, 2,000 bucks, whatever. Just take the damn money. Over here, you're out. Wait, wait, wait. Over here, short opened. Break even, out. And you just chase it up. Because at some point, you're going to see this. At some point, you're going to see something like this. Let me show you. Where's my chart so slow? At some point, you're going to see this. You're going to see this. Where are you? Where are you? My chart is very slow today, guys. Let me see. At some point, you're going to see this. This is where you're going to make money. This is where you got to make the money. At some point, you're going to see something like this. Over here, close below it, boom, boom, boom. Over again. Over here, your entry again. 200 EMA, you take profits. You wait, retest, you enter again. And then boom. You decrease your position over here, by the way. And then boom. Over here, out again. You wait, wait, wait. Over here, the retest, entry. Boom. You wait, 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 wait. Over here, retest. Boom. You wait, wait, wait. And over here. Until, and over here, especially here, you see when the 200 EMA comes together with the indicator over here, this is about the best entry you can get over here, this one. Because the 200 EMA comes together with the indicator. Boom! This is the big move. You see this big, this is a move, guys, this is a lot of money. It's 15% down on a leverage of a 30x. It's a 500% P&L. You see? Boom, boom, boom. And this will happen again. I know that's going to happen again. You just need time to eye it. And if you don't have the time to eye it, then I suggest that you have to use the bigger time frames, 4 hour, 1 hour daily, and or you have to watch the chase trading vid. If you want to do the chase trading, it's a bit risky, but you need to own the funds. But let me just say that the team does a lot of chase trading. And let me tell you, out of the 1,000 trades that they made, they lost maybe 2-3 trades. Maybe. They lost like 2-3 trades. So keep that in mind. So guys, this is Leverage Trading Course 1.0. I hope that you guys keep repeating what I explained here. And but you know, the video is now running for like 45 minutes. So I think I said enough, but the most important part is this. Control your greed and emotions. And how do you do this? Because it's very easy for me to say it. Hey, listen, control your greed and emotions. Yes, okay, kabish, kabish, yes, yes. And then in reality, it doesn't happen. But how do you do this? How you do that is by, you need to have enough funds on your account so your liquidation level is very high. At least a double or a two double or 1.5 or 75%. But that's the only way. Higher liquidation is the only way how you can control this, and you'll see the bigger picture. And you'll not make those stupid mistakes by getting liquidated or whatever. Okay, guys, until the next one. So this was the basic. I hope that in the next one, I didn't decide what one I'm gonna do. Trading Course 2.0, but well, let's see. Okay, guys, thank you all for watching. Have a nice one, and bye-bye.